Hey, are you a multifamily real estate investor trying to determine where you could fit in on a syndication team? Well, it turns out you might already have the fundamental skills and training that you need to have a shot at real success on a multifamily project. In my conversations with my clients and other aspiring investors, I often ask them what they do or did on the job, because you might not realize it, but those same transferable skills that you've been refining at work for all these years can help you as an investor. So today we speak with Adam Roberts and Emily Cortright of A&E Investments to hear how they were able to turn a successful corporate career into a successful career as asset managers and syndicators. Listen, the worst thing you can do as a new investor is to fail to clarify exactly how you can add value to a team. So you want to make sure to tune in to get the perspective of a team who's been there and done that. So here's Adam and Emily of A&E Investments.
Are you a busy professional in the DMV area looking to invest passively in large multifamily syndication deals? Do you want to meet with other like-minded investors of all experience levels to learn, network, and discuss some amazing investment opportunities? Then look no further than the DMV Apartment Investor Community in-person meetups. Our monthly meetups offer a space for you to connect with other investors, learn from industry experts, and discover lucrative investment opportunities in large, multifamily syndication deals. Whether you're an experienced investor or just starting out, our community welcomes everyone who is interested in growing their wealth through passive investing. Join us at the DMV Apartment Investor Community Meetups and take your first step towards financial freedom today. Visit our website now to learn more and register for our next meetup. We'll see you there.
What would you do if you had the freedom to pursue the things you enjoy the most? How incredible would it feel to have the resources to pursue your passions fully and live life on your terms? This is Brandon Jenkins, host of the Capital Stack podcast and principal of Birch Prosper. You might have heard that 90% of the world's wealthiest people attribute their wealth to real estate investing. Well, guess what? It's true. Investing in real property continues to be the greatest generator of wealth all over the world. So join us each week on the Capital Stack podcast to hear about how commercial real estate group investment opportunities can help you reach true financial freedom and give you your time back. Hello, everyone. What's up? And welcome back to the Capital Stack. I'm your host, Brandon Jenkins. One of the things that we talk about on this show a lot is infrastructure. All right, around having a company and a firm that is built to withstand growth, a company that has a vision and a direction in terms of where it can go, but then the support and the team and the infrastructure to facilitate that growth. And we're going to get into that today with our guests, Adam Roberts and Emily Cortright of A&E Investments. How y'all doing today?
Hey, good. Thanks, Brandon, for having us. Really appreciate it.
Absolutely. Thank you all for being here. So Emily has been a real estate investor since 2013. She got her start on the single family rental and flipping side, like yours truly. She leads several major councils and charitable efforts with Keller Williams Realty in the DFW market, amazing submarket and area to invest in, where she works closely with prominent brokers and leads the team's strategic acquisition plan. Adam joined Emily in 2018 to help run their real estate business in a full-time capacity. So that's something that we'll talk about, is making the transition from corporate to full-time, very important milestone. In his past life, he worked in global management roles with GE Aviation and transportation businesses. So he currently leads the asset management strategy for A&E's multifamily holdings, working closely with on-site and regional management teams to ensure success. Together, they are lead sponsors of apartment complexes ranging from 10 to 52 million in purchase price. Very impressive, with a current portfolio of $220 million in value. So did that cover it all? Is that everything?
That's a good bio.
Absolutely. So why don't you guys kind of share a little bit of your journey, your background, and what led you to this space?
Yeah. So thank you so much for having us on today. One of the things that happened back earlier in my childhood that I remember is I saw my dad celebrate 30 years at his job, working the same job for 30 years. And I asked him, I said, so when are you going to retire? And he looked at me and said, I can't retire right now. And this was 2009. He had invested in stocks and mutual funds his whole life. And now he was handcuffed to his job because the markets were down.
Mm-hmm.
And I just kind of sat there in disbelief and said, like, this is not going to be me. I'm going to do something different. I don't know what it is yet, but I'm not going to have my retirement years taken away from me like that. And so fast forward, I meet Adam. We both follow the normal track of go to college, get a good job, climb the corporate ladder. But he invites me to a real estate investing class one night. And at first I'm like, what are we doing here? I'm not going to invest in real estate. I don't know anything about investing in real estate. But it was literally the 2-hour class that changed our lives. And it showed us the math behind real estate investing and how real estate investing can provide financial growth and security and passive income for the future. And having engineering backgrounds, math is very important and black and white for us. If the math shows it, it can happen. And so that was really the light bulb moment in our lives that said, we need to pursue this. And then it just so happened that within 6 months or so after that training class, I was working for GE full-time, and GE announced a divestiture. And so they were selling off the business. I couldn't go back to headquarters. It was basically get bought out by the new company or quit. And we made the decision to pursue that. I was going to leave my job full-time. I was going to leave and start real estate investing. And Adam would maintain his job, so we would still have a paycheck coming in. So that was back in 2013. We moved from California to Texas and started our real estate investing empire.
Oh, that is awesome. Awesome. Thank you so much for sharing that background and journey. And, so we actually share some or have some things in common there, because my background is also in engineering. And, one thing that I've experienced or observed is that you really it's kind of 50-50. So some engineers do exactly what you said, which is you understand the numbers, and because the number it's supported and backed by the numbers, you take action. But I've also seen that, one of the things that's common in engineering is understanding risk and quantifying risk. And so, I've observed that some engineers are kind of hesitant to actually invest, right? I mean, and to take the action to do so. So it's really good that you all took the necessary steps to do that. I think the other thing that's super important that I appreciate as well is that you went to sort of a training course, and you said it's a couple of hours, but then you actually took the action that I'm sure that the program or the course was trying to get people to take. And then there are a lot of people who went there and said, "Oh, this doesn't work," and they didn't do anything, right? And so and I can guarantee you, whoever would make that decision, they don't have a $220 million portfolio the way you all do. So just want to applaud you on that. But I think that's that's very powerful. So Adam, maybe share kind of some of your background there, and also the decision to make the transition that I'd like to kind of get from both of you, because it's not an easy thing to do, right? To switch from corporate that mindset to entrepreneurship and investing.
Yeah. So where I initially caught the real estate investing bug, my father, similar to the story Emily told, I grew up in a conservative household financially. Both parents were career people, raised us in a household built around saving money and investing conservatively. But my dad, when I was going into high school age, my father helped me with a budgeting spreadsheet, essentially, monthly tracking of what you're spending your money on and where your income is coming from. And every year in that spreadsheet, looking out, let's say maybe 10 years into the future, he would add a rent house and say, listen, I don't, obviously he didn't do it. Like, we didn't own any rent houses growing up, but he's like, I've heard this is good. And we put it in the spreadsheet, and look at this, after 10 years, you could be making this much money and all that. And I said, wow, that's pretty neat. And, buying one house a year seemed pretty achievable. So that was, fast forward to the real estate event. That's the reason when I saw the ad for the couple hours, evening real estate seminar, I said, okay, well, I've seen this in the spreadsheet. Let's go see what this is all about.
Yeah.
And then, we took the dive, like Emily said, and then we always had a vision for me to join her full time. After after we did our first couple of investments, which was a 4-unit apartment building and some single family homes, we knew that it could be scaled, and with the right amount of effort and resources, we could do it. So we always said, hey, listen, let's just find a way for Adam to get into the business. It wasn't until we made the switch to multifamily that the financial resources were there for me to actually quit my job and go full time. But we didn't, I always tell this story. We didn't do that when it was like super safe, right? We made one large multifamily acquisition in 2017 or 2018. And that covered, probably about half of our living expenses. But I knew that if I could quit, join her full time, my 100% focus in real estate could help us get our second deal and then our third deal. So it was never, I never felt, from you mentioned, Brandon, risk. I never felt like the risk equation was unbalanced, too unfavorably. But it was never, 100% like, oh yeah, this is safe. I'll work 2 days a week and we'll get there. It was like, okay, I'm going from full-time job to even more full-time job, and we're going to make it happen.
Yeah, I love that. And you said something though that I think is very important, in that you knew that by shifting and going full-time into this space, that your return on that time is actually more than enough to then make up for the gap that you were kind of considering financially in your income. And so that's something that people don't talk about enough, because the reality is, yes, you can wait if you want until, dollar for dollar, whatever your business is on the side or your investments match and maybe exceed your W-2 income. But the truth is, the more time you spend on that versus pursuing, your business, you're actually taking a little bit of an opportunity loss, I guess you could call it.
Yeah. And if you're in a salary job, a W-2 job, it's very easy, obviously, to calculate like, hey, here's what my hourly, return on investment is. Simply take your salary and divide it out by how much you work. But as an entrepreneur, it's much different. There is a little bit more risk. However, the returns, to your point, could be far exceeding what you're currently making in, say, a W-2 job. Yeah,
absolutely. So now I want to say, this is another point. So 2 things. One, you all were aligned, it sounds like, which I think is important. And I just want to talk about that for a moment, because I actually interviewed someone recently where that was the discussion, was around having an aligned vision kind of before you pursue something. Was there any I guess I'm curious to know kind of who started it off, and were you guys kind of on the same page from the beginning, or was there some a bit of a tug of war there? Just always kind of curious to know how teams and couples that kind of arrive at the same sort of vision with something like this.
We really were aligned from the beginning. The reason that we decided for Adam to stay in corporate was because he was 2 years ahead of me on the corporate ladder. So he had a higher paying role, and he was a more marketable, manager, could manage employees, things like that. And so to live on one paycheck, it was important to have the person who was making more money keep that paycheck. And I felt very confident in my ability to learn the single family real estate investing business and then execute on that, because even at GE, I was managing different assembly lines. So a paint department, an assembly department, different things like that. And it was actually very similar to go from managing plant employees, manufacturing employees, to managing roofers and foundation guys and house painters and cabinet installers. And so the transition wasn't as bad as I expected. And I think anybody who has people management capability can transfer those abilities to the single family investing world and multifamily.
Yeah, I agree. I think that transferable skills, that there really is something that I think people should consider a little bit more. So if you think about it on a daily basis, you're fine tuning, your skills to work with, cross-functional teams, reporting, communication, addressing problems before they kind of get blown out of proportion to minimize the fallout or the risk to the company. These are all kind of things that that are directly applicable to the multifamily business, or to invest in various types of real estate. You still have to work with the team to get the job done. You have to come up with a solid plan and vet the plan. You have to understand the market and what the potential value proposition is. So I just love that you all were able to do that, successfully see that, hey, yeah, this is something that we can do, and we more or less have the fundamental skills to do so. Starting off right now, so very powerful. So how did you all kind of decide on DFW? Great market, So I think the decision's an easy one. But just generally speaking, how did you kind of decide to say, you know what, I think we want to select that market?
We that first real estate training that we went to, at the time we were living in California, working at GE. And during the training, the trainer and the team there that established the curriculum kept on mentioning Texas is just this really hot market. Oh my gosh, Texas is super hot. You got to get in. And they were kind of approaching it, especially with all the California attendees. They were approaching it from, hey, make your investments, live in California, make your investments. Unfortunately, we were working in California on Ohio wages, so we didn't have that money. Right. But yeah, and then when we made the decision, the divestiture happened with GE, and then we were more or less at a pivot point in our lives, and we said, okay, well, what are we going to do? We'd been dating for a year and a half, so that was in there too. That was like, oh, are you moving with me? Are we?
Yeah, you sure? What do you want to do?
Yeah, right. Yeah, and then we made the decision about who was going to work in that, and I had found a job here in Fort Worth. It was a great aerospace leadership role at a landing gear facility, and that just seemed like a natural thing. We're like, okay, that's it. Great job. Let's go after it. We'll relocate and.
Good. No, that's outstanding. So, yeah, that's kind of, like I said, to me, the DFW is just, it's a really outstanding market. I think just in terms of the fundamentals, and we can even kind of talk about that. So when you guys are evaluating a deal, just kind of out of curiosity, what types of deals do you look for? What's some of the criteria that you all like to focus on?
In terms of multifamily, we are currently looking for, I would say B class, something built in the 80s or 90s. We used to buy properties built in the 60s and 70s and had great lessons learned from those properties. And so now we try to focus on newer, so 80s, 90s, early 2000s. Location is very important to us. So we want to make sure that the median household income is strong. And by strong, I mean maybe 60,000 or more. We have bought properties where it's been lower, and we have learned the lessons that it's harder to find the right tenant demographic in those neighborhoods. And this is particular to the DFW market. And again, location, making sure good school districts, things like that. But in terms of the pricing, we've almost focused more on like the location and the different stats. And then we say, if it's a good enough deal, the money will come in. We'll be able to raise the money, or we'll bring in the right partnership to raise the money. And that's how we've scaled up to a $52 million property, because it came across, it was in a great area. It was a great property. And we said, this is one that we want to do. And it's like, okay, how are we going to do a $52 million property? And we just pulled together the right team to do it.
Yeah, that's awesome. I think those are definitely all the right things that, you have to have your criteria lined out for, is right vintage, type of property, location, and then the demographic and even the psychographics, but also whether or not the, like you mentioned, the median, can it support the business plan? So I'm assuming, so you guys kind of do more of a value add type of structure, or what's your typical business plan?
Yeah, I would say there has to be some value add component in order for us to be interested. But a property built 30, 40 years ago is definitely going to have some capability to implement a business plan that's meaningful for the current residents. Not to say that a super stabilized property that already has a lot of implementations wouldn't be interesting. I just think there's plenty of meat on the bone here in Dallas, in multiple markets, where we can get excited. Obviously we're going through a little bit of a multifamily cycle right now, and there hasn't been a lot of acquisitions in the past 12 to 18 months. And so there again, time has passed. There's going to be more units to upgrade. There's going to be more projects to implement at the properties. There's always something you can do with these properties to help bring value to the folks that live there.
That's an excellent point, right? So, like you said, time has passed, because that's so people, will ask me sometimes, well, with this kind of model, don't you eventually run out of opportunity to improve and add value? And my answer is always no, because if the property is in one owner's hands for, I don't know, 5, 10 years, whatever it is, there's always going to be an opportunity then for that next buyer, even if it's a shorter time frame. There's always going to be an opportunity then for that next buyer to step in and to add value to the property. So I like that you mentioned that. So now I want to ask you, because I mentioned in the intro, right, that you all have a heavy focus on acquisitions and asset management. And I want to ask the question first about asset management, because I think that's one of the very most important pieces in all this. Once you buy the deal, you're at the starting line. And so, maybe just explain for the listeners, what is asset management, and what do you think is an example of kind of what, good asset management looks like?
It really, to me, it has two pretty distinct components. First, you've got the people component. It's very simply the folks that are managing these multi-million-dollar communities are everyday people, and most likely, most typically, they're very good at what they do, and have probably been doing it maybe longer than Emily and I. So you kind of have to keep that in mind, right? And so there's a people component to it. And then secondly, the second distinct item, there's obviously the mechanics of it. It's an operating business. It has a profit and loss. It has CapEx, investor funds. So for me, I really approach the asset management idea as, hey, it's people leadership first and foremost, right? Everybody at the property, working at the property and at the management company, they go to work every day wanting to contribute, right, to their job, essentially. And secondly, we need to create an environment where they know what the vision is, what a good job looks like, what we need out of the property's performance. We do, as Emily said, we do a pretty conservative underwrite on it, right? We buy in good areas with a capable tenant resident profile. And so, making the vision and the business plan clear with the right parameters and the right operating rhythm for the people that are helping you achieve that goal. That's really my belief around asset management. And from there, it's just, to your point, you're at the starting line. What operating rhythm do we need to put in place so that we're successful?
And another way that I like to put it is you have your front end, which is like interfacing with the property management, doing the projects at the capital projects at the property, that kind of thing, managing the occupancy, and then you have your back end. And the back end is the financials, the lender relations, everything, the investor communications. And so when Adam and I were doing the asset management together, we ended up splitting up our roles into more of that front end and back end type of responsibilities. And that's just another way to help visualize.
Yeah, I think that's an excellent point, because if you don't have the back end handled, then everything can kind of fall apart. It's really about making sure that someone is paying attention to, hey, how does this impact the performance of the portfolio, as a whole, and then also looking at certain metrics with it, whichever metrics are important to you, because having a handle on those can then, impact the front end, which is, okay, how are we interfacing with the property manager? How are we working with the people and investors to communicate what's going on and what our vision is? So I think that's incredible. And again, it's just, as I'm hearing this, it really sounds like, that transferable skill, like we were talking about earlier, because a lot of this is similar to what's done in corporate America. You have these same kinds of conversations. You have a certain cadence, a very professional, sort of infrastructure that's built out to make sure that you can deliver. And Emily, so one thing I'd like to ask you about is around building relationships with brokers, because I find that that's something that's super important in this business. And for people who are newer to this business, I know you all are not, but for people who are newer to it, there's this sort of nervousness or anxiety around, how can I really present myself in the best light if I don't have, track record? But just maybe explain kind of the importance of building that relationship with the broker to facilitate, success in this business.
Yeah, it has taken a while. And I'll give an example. Our first year when we were trying to buy our first multifamily property back in 2017, we were trying to get lunch dates or coffee dates with the different brokers in DFW, the main powerhouse brokers. And most of them returned our calls and met with us. But there was one particular who had a lot of listings, and he would just not return my call. And finally, I go to our partner who was much more experienced than us. And I said, hey, I'm not getting any response. Can you send a quick message, and can you, get me a little in with him and see if he can respond? And sure enough, within about 20 minutes, I get an answer back from the broker and says, hey, let's meet up. And so it goes to show that sometimes you do need help from the more experienced people. And that goes back to a conversation that we'll probably touch on, and I'm sure that has been touched on in your other episodes, is about building a team. And as a brand new multifamily investor, you're probably going to have to partner with a more experienced person. And that more experienced person, you could leverage their relationships, because as a brand new syndicator, you don't have the relationships. You may not have the capital raising abilities. And so you're leveraging other people's relationships, there are other people's equity raising capabilities and things like that. And we absolutely did that from the beginning, because I tried my best to get lunch dates and coffee dates with these like big powerhouse brokers, but eventually we did need a little bit of help to kind of break down that initial barrier. And then as the relationship develops, eventually you can be the one on the golf course with the brokers. You could be the one inviting the brokers, to a steak dinner, not because you had a closing, just because you want to talk to them. And you can build those relationships. But one of the best things to do is to buy from them and show them that you can execute. And once you've shown them that you can execute on a purchase, their trust in you and their respect for you goes up by 100 times.
Yeah, great point. I mean, I share that with people all the time, is that, if you are starting out, the bottom line is, this is a relationship build business. It takes time to build relationships, and you'll have to do exactly what you said, which is leverage people who have experience. And I call it partnering up. You just have to do that, because, even from a practical standpoint, so if it is a power broker in the area and they have a lot of listings and their time is very limited, then from their perspective, it makes sense to then deal with people who they know can close, that surety of close. That's something that's important to them and to their reputation. And so, I know that from some investors' perspective, it might seem as if they're standoffish, early on, but sometimes it can be like, so DFW is a high, well, I know right now it's not, but traditionally it was a high sort of transactional volume type of market. And that's kind of how it is, it's so I like to share that with people as well. It's like, listen, what you'll have to do in the beginning, you have to make sure that you network so that you can leverage experience and the contacts of others too. Because I like that you pointed out that it was a phone call or a text to someone else that got you in there like that. So imagine if you didn't have that connection established and that relationship built up, how much more time it would have taken you. So it really is interesting how this business works in that way. And so maybe just let's talk about something. This is kind of as a follow-on to that. How can someone then make connections with someone who's experienced that will lead to that, right? They're being able to leverage their experience in order to help them get farther ahead.
For us, it was simply having a pretty clear vision and a goal for what we wanted. We wanted to get into the multifamily industry. We wanted to break through and do a deal. And we were willing to put in the sweat equity to do that. I think when you put your networking on overdrive and you just get out and talk to people without any preconceived intention of, investing with them or doing business with them, and build those relationships, as well as go out and do the work, and people can see that you're actually putting in the efforts and you really want the goals that you've set out to achieve. Those two things I think really go hand in hand. And for our first partnerships, I think that really helped us, because we didn't try to necessarily latch on to someone else's, efforts. It was more like, hey, we were out doing our thing, underwriting deals, getting the proper coaching and mentoring, going on property tours, meeting with brokers, and then, hey, we're also looking for partnerships. So if you've got any interest in partnering with a couple new folks, here we are doing the work. So I think that really worked well for us.
Well, and we had very intentional conversations with potential co-sponsors, partners, and the conversation was structured around, here's our strengths, are what we want to bring to the partnership. Here's what we're looking for our partner to bring to the partnership. And one of the unique things about that conversation for us is we wanted to do all the asset management. We didn't want a micromanaging co-sponsor. We didn't want to share in the responsibilities. And the reason for that is because we wanted all the income from the asset management, because we had to pay for our lifestyle. We needed that asset management check coming in every month. And so that was a really unique scenario, because we got about 6 no's, which is good because I didn't want to partner with the wrong person. And then we talked to the 7th person, and he said, he listened to our corporate experience, our background, our single family investing experience. And he said, let's talk more about this. It wasn't a yes at the beginning. It was a let's get to know each other better. And that phone call turned into a lunch date, which turned into a dinner date. We met him and his wife out for an evening out. And all this time we're talking about roles and responsibilities, who's going to, expectations, compensation structure. And at the end of all those conversations, he finally said, yes, I'll work with you. So he was essentially a silent co-sponsor, but he raised the equity, he had the relationships, all those different strengths that we were looking for from that very beginning, like intentional conversation. And so it ended up being the perfect partnership for us. And I think a lot of people just kind of rush into partnerships these days, and you have to remember this is a 5-year business marriage. So it shouldn't just be one phone call. It should be multiple meetings, multiple conversations on expectations, compensation structures, roles and responsibilities, because that's when it comes down to, if something doesn't go right, it's going to go back to those conversations of like, well, this was your role, or this is how we said it was going to get split. So.
Yeah, that's all great points. I mean, I think, and you're right, to have those conversations up front, to be intentional and clear about it, it can really save you a lot of headache. And also just even going in, it can make it very clear, like, this is what I'll be working on and focusing on. And so it can prevent things like, kind of not overlap, but it can really help focus on the mission. Right. So I think that's incredible. And all those things are, to me, it's just very important to have those conversations up front. I do think it's very unique that you all started off saying, hey, we want to do the asset management. It's probably the first time I've heard that, but I think it's important to come in saying, this is what we want to do. And, we would like to, to have you as a partner, but if that's not something you're comfortable with, then, fair enough, let us know. But it also, I would imagine, would give people a clearer sense of what you all are looking for, because like you said, that's a mistake that some people make, is stepping into this arena, but not really clear on which lane they want to operate in. But if you come in saying, hey, we're looking for partners, but this is what we want to do, this is our piece of it. If you don't do that, then you kind of run the risk of things just not being clear. So I think it's outstanding. And on the topic of that, right, on building a team, maybe talk about, first of all, just for the listeners who are maybe new to this, right? What does a team look like in syndication? And we've already talked about asset management, but what are some of the other pieces to the team?
Yeah, so the other responsibilities or the roles that team members take generally, you might have somebody who works on acquisitions, where their core focus is broker relationships, underwriting deals, keeping the pipeline full of interesting investments, that kind of sales funnel of acquiring properties. You might have somebody also focused more on back-end systems. So, there is a fair amount of accounting and financial reporting that goes on these investment properties. The management company generally does the ground level accounting for the property, but then it's up to our group to make sure that that's communicated in a meaningful way to the investors so that they understand how their investment's doing. And so that's somebody on the team's focused on that predominantly, along with, other back-end systems, tax accounting, tax reporting, making sure all the proper things are getting over to the CPA for tax time, things like that. Investor relations is taking on a very large role these days, especially as acquisition activity is kind of cycled to a slower pace. A lot of investors are curious to know, hey, how's my investment doing? And so that generally, I would say a lot of us on a team will do a little bit of that, just based on relationships. But like our team has a system set up where the investors get newsletters at some cadence, and then they get financial reporting at some cadence. And so a person on our team just manages that process and make sure that those things happen without any issue. And so those are some of the other roles on the syndication team.
Yeah, and I think that having all of them, are very essential to this. It's funny because if one of them drops off, then you can see sort of either the operations will fall off or the investor confidence will fall off, both of which are very important. And so, yeah, I just think it's outstanding to have that. And so you mentioned that we're in a time where the investor relations piece and the focus on that has increased, and I would agree with you, right? So we're in a bit of a lull or a slump in transactional volume. There's a certain message that's being put out there about kind of what the economy is doing right now and how it's impacting our business. And so investors are interested in, a lot more curious in terms of kind of what's going on and is there capital protected? What are some of the things that we're doing to make sure that we manage our way through this period, especially depending on how the deal was structured when you bought in. And so, so it is very important. A similar time was obviously during COVID. We had this once in a generation sort of pandemic, and people wanted to know, okay, well, look, how is this impacting the deal? So that's one thing I'd like to actually then talk about is, I believe that during different phases in the deal, asset management looks different, or even, it just, so when you take over the asset, there's certain things that you're doing in terms of reporting, communication, versus once it's stabilized, and then versus once you're ready to sell. So maybe we can talk about that just a little bit. Like, what are your thoughts on, immediately after takeover, what kind of things a team should be focusing on, and then once it's stabilized versus once you're ready to exit?
Yeah, so immediately after acquisition, a lot of the projects kick off. So what our reporting typically consists of is more on the execution of projects and capital, execution, more so than say financials and hey, here's how we're doing to the pro forma. It usually takes the management company a month or so to kind of get things taken over and get the financials in order, and things start to look like you're operating a business, essentially. And so we generally spend a lot of time communicating how we're, getting things finished at the property for the business plan, how we're spending investor money, things like that. That usually comes together pretty cleanly in the first year. For, I'd say, heavier value add projects, maybe the first 2 years of ownership. In that time frame, the property will self-stabilize itself. Like Emily mentioned, we're going after assets that are 90+% occupied already. So there's not a whole lot of things to do from that perspective. And so, generally speaking, within a 6-month time frame, we're able to start making investor distributions, if that's part of the business plan, because we've got a steady handle on, cash flow coming through the property and spending money on the capital projects. Nowadays, over the past several years, we've bought a lot of deals where the lender actually holds on to our CapEx dollars. So that's been kind of a challenge of sorts, is to make sure that, the similar things that are communicated to the investors also get communicated to the lender, because the lender is the one who's ultimately going to help pay for those projects with our money that they're holding on to. And so, it's all kind of just communicating the right thing at the right time. And, we've got deals that we've owned for several years where, the CapEx projects are finished, the money's spent, things are just kind of humming along, and, the newsletters go out, and there's, potentially a couple questions here and there throughout the year, but not much else. So to your point, yes, it does take on kind of a different flavor depending on where you're at the cycle.
And I think another really critical point of communication during the first, say, two years is between I'd say the asset manager or the business plan implementer and the property management when it comes to other income increases. And so I'll give an example. Let's say you're going to add bulk Wi-Fi to the property. That's a really hot thing right now, where the owner buys a bulk contract for internet at, say, $50 a door, and we charge the tenants $80 a door. And you have to roll that out. Well, let's say you're set to start getting income the day one of year 2. Well, 6 months into the project, the conversations need to be had about, okay, where are we going to get bids for the contract? And it's such the importance of having conversations well ahead of when the income starts hitting our budget is so important. And it can even go down to, let's say we want to buy washers and dryers or put in private yards. Well, if I need to get income from that private yard day one of year 2, I need to start building the private yard in like Q3, so that it's ready by year, the end of the year. And I think that's one of the most important jobs of the asset manager, and whoever's implementing that business plan, is making sure they're implementing the projects and communicating to the property management company well ahead of when that other income needs to hit on the budget.
Yeah, those are incredible points. I'll tell you there are 2 things that I'm sort of pulling from this. One is, and this is key for the listeners as well, is the importance of communication throughout the entirety of the business plan, whether it's communicating to the property manager, communicating amongst each other as a team, communicating to investors. And the other one is, I like to tell people that this is a full-time gig here. If you're really into asset management, kind of the way you two are, I'm not saying it's impossible to do if you're not full-time, but if you're full-time, then you can really, really start to dial in on the things that you're talking about, because it takes time to say, let's look 6 months in advance of when we're expecting this income to hit. Let's have these conversations. Let's work out all the bugs in the meantime, and then let's make sure we have a smooth transition, because all those things, it's a matter of tracking, a timeline of events, and then making sure that you're well ahead of them and that you're in place to be able to make those calls, site visits, whatever it is. And if you're full time, you can do those things, so, I just think that those are all powerful points that it's important to, like you mentioned, Emily, just to make sure that you're communicating to make it nice and smooth to when you actually onboard whatever initiative it is. And then Adam, you also mentioned just making sure that your communication adjusts to all phases of the project. I think is really, really important. And so for the folks who are listening to this on the podcast, you can't see it, but you guys have a lot of equipment there in the background. Got some band equipment going on back here, and actually,
that's it. Yeah, we don't do real estate only. We also own a band.
Yeah. Let's talk. So we've been talking about the serious stuff. Let's talk about some fun stuff. What's going on back there? Who are you both in the band, or what's?
No, that's me.
Adam?
That's my hobby. Yeah, I play a few instruments well, a few not so well, that kind of thing. And I'm in a local country music band here in Dallas. So
very nice.
We kind of gig locally on the weekends.
Okay. Well, so which instruments do you play well?
Piano and guitar.
Very nice. Very nice. Very nice.
Yeah.
That's good. Do you invite your investors out to the?
I do all the time. I do.
And they don't show up.
Only a few ever come.
No, that's cool. Yeah, in your background, you mentioned so you're also a flight instructor. Is that correct? Emily, do you fly with him sometimes, or is he?
Yeah.
Oh yeah, that's a big part of our lifestyle. Actually, we've got a couple airplanes, and we love to travel. So, like a couple weekends ago, we were in Aspen. We flew up to see her family in Cincinnati last weekend. So yeah, that's a huge part of our lifestyle, flying around.
And a funny story is our very first date, he took me flying. And
wow.
I'm an adventure junkie and an adrenaline junkie. And so people are like, how did you trust him as a pilot? I'm like, I don't know. I just did. It was adventurous. And so we went flying on our first date. And on the second date, I taught him how to ride my motorcycle.
Oh, that is cool. Those are the best first and second dates I think I've ever
That's
read.
right.
I know,
man. I was more scared on the second date than I was on the first.
My goodness, you didn't go get coffee. You guys went and flew.
No.
That is incredible. That's incredible. So it's interesting because, I like to talk about when I make the kind of an analogy, or I try to explain what a syndication is, I often use an airplane, because it's like the pilot, the pilot, and the co-pilot. Those are kind of the sponsors, and then depending on how you have it structured, if you have a pref equity partner in there and then common equity, then you might have pref equity in the front, because they take kind of the snacks from the cart before it goes to the the economy seating. So it's just kind of a good, it's honestly that for me, that comparison came out of a bad experience I had on a plane where I was feeling really sick, but despite the fact that I was going through it, we safely, we got to our destination safely, because the crew, their experience and everything else, they knew exactly what they were doing to help us out. So I just think it's really cool that you guys are doing that.
Yeah, absolutely. It's a good it's fun pastime. You work hard, you play hard, right?
Oh yeah. Awesome. All right, so we're getting kind of close to close, but I did want to ask some details kind of about what's next for you all, what direction you're headed in, especially in light of where we are in the market. So what's next for A&E?
So actually, we have with multifamily being a little slower, and it's almost been a year since we've bought something, because our conservative underwriting didn't really align with the higher interest rates, the higher insurance, the higher taxes in our market. And so we have added to our portfolio, our personal investing portfolio, more cash flowing investments. And that's in the form of mortgage notes. And so we're doing a few things. We're doing some private lending on flips in the DFW market. So just like I used to flip houses here, and I used to borrow from private lenders or hard money lenders, now we are the private lender, the hard money lender, and somebody else is doing all the hard work on the flip. We also have bought mortgage notes on the secondary market at a discount. So we're literally buying cash flow streams. And it's very different from multifamily, because you don't have this big opportunity for gains on the back end. It's more so literally just buying cash flow streams. But what we realized at the end of last year is that personally, we were probably about 90% invested in multifamily, and it was just a little bit too concentrated in one asset class. And we felt that it was safer for us to diversify our portfolio a little bit more. And so we've really been excited about having the multifamily provides big gains on the back end, and the notes that we're investing in as private lenders and as in the secondary mortgage market, that provides solid cash flow. So that's really what we're focusing on today, is just a little bit more diversification of big gains and current cash flow.
No, that's awesome. I think investing in notes is a powerful strategy, especially if you find the right market to where you don't face much resistance in terms of trying to get the asset back if you run into problems. But no, I think that's really cool. So that's good. So kind of going forward, that'll be kind of your strategy, is to focus on both more cash flowing assets in the near term. No, very good.
Yeah.
Good. So all right, we're at the point of the show where we get, I want to get an actionable tip for the listeners. And so if there's someone who's listening to this and they're excited, they like the journey that the two of you have been on, and you've had great success in this business, but they're hesitant, right? So what can they do to then take action today to get into the business?
I would say find a way to become part of a community. And, today there's a lot of virtual communities. I prefer the face-to-face, but go to your local meetup, get some business cards, touch base with people, take them out to lunch, learn about what they do, and start to build a community outside of your normal and typical, whether that's like your work community or your family. Build a community. If you envision yourself doing something different in a number of years, then start building that community.
Yeah. And I'll give an example. We have a multifamily national conference coming up, and there's a link on our website under podcasts and events, and it's coming up at the end of August. And it's an example of one of those weekend trainings that could change your life. Just like we experienced back in 2012 and 2013, when we started with a 2-hour training that led to a 3-day training that changed the direction of our lives. And so there are live events to attend. There, like Adam said, there's education programs, but really education was the big thing that allowed us to transition from single family to multifamily, because you don't just start syndicating 10, $20 million deals without knowing what you're doing. I like to say that single family, it's a very individual sport. Like, it was our money. If we lost money, it was all on us. Multifamily, when you are managing other people's money, you have a huge responsibility to know what you're doing and to know the industry, know if you're going to be doing asset management, like know what to do, be educated, because you have a responsibility to all of your passive investors to be fully knowledgeable on the investment. And so it's a much higher level of responsibility to go from the single family investing that's just us to multifamily syndications.
Yeah, I couldn't agree more. And I love that you mentioned mentorship and coaching, because I think that that's one of the fastest ways to compress the learning curve and to not only understand it for yourself, but then to partner with people who have had great success with it. And I share that with people all the time. People are resistant to joining communities and mentoring because of, I know that, that depending on who you hear it from, it's usually when you hear from people who have never done it. But when the negative view of it is typically from people who haven't taken action. But for the people who have, like yourselves, and who are intimately familiar with the results that you can get from a good mentorship program, then it's well worth it. And so, I think that's just incredible. So where can the listeners hear more about you and maybe reach out to you? Can they do that?
So we've got a new website, actually,
Right.
aeinvest.net. And so that'd be the best place to connect with us. And we love doing phone calls and Zoom chats and stuff like that. So definitely reach out.
And you can remember, because AE is Adam and Emily, we were really creative on our business name. aeinvest.net.
All right. Awesome. So I'll put that in the show notes. And Adam and Emily, has been incredible speaking with you today. Thank you so much for adding value to the show and to myself. I appreciate it.
Thank you, Brandon. We're honored to be on. Really appreciate it.
Yes, thank you. Have a great day.
You as well.
As always, thank you so much for tuning into the show today, brought to you by Bridge Prosper. If you enjoyed today's episode and you'd like to learn more about commercial real estate investing, please like, subscribe, and share. And we'll see you again next week. I'm Brandon Jenkins, and this is The Capital Stack, where we help you learn, apply, and prosper.